Asian shares extended a global rally today as strong U.S. export corporate earnings and expected resumption of Russian gas supply to Europe helped lift risk on sentiment and ease fears of a recession. While the dollar was mired at a 2-week low, European futures also pointed to a stronger open, where the pan-region Euro Stoxx 50 futures last up 0.2%. In Asia, the MSCI's broadest index of Asian Pacific shares rose 1.2%, driven by a 1.6% jump in resources, heavy Australian, and 1.7% in Hong Kong stocks. Japan's Nikkei surged 2.5%. Chinese shares rose 0.4%, lagging gains in and other markets as the central bank kept benchmark lending rates unchanged amid the shaky economic recovery from COVID-19 lockdown. And importers of technology products from China paid over $32 billion worth of tariff imposed by President Donald Trump between mid-2018 and the end of 2021. A new trade group reports shows on Tuesday as the Biden administration continues to deliberate on whether to remove some duties. The Consumer Technology Association in its report notes that tech industry has reduced its dependence on China in the wake of tariffs. But this has been offset by increased imports from Vietnam, Taiwan, South Korea, Malaysia, and other countries. Roughly half of the $32 billion in tariff were paid on Chinese products, computers, and electronic products, according to the Customs and Border Protection data. Total Section 301 tariffs paid on Chinese goods through July 13 totaled $145.43 billion. Now, almost finally, the European Union is set to carry out emergency plans today to reduce gas demand within months, warning countries that without deep cuts now they could struggle to fuel during winter if Russia cuts off deliveries. Europe is racing to fill its gas storage ahead of winter and build a supply buffer in case Moscow further restricts supply in retaliation for Europe's support for Ukraine in its war with Russia. Russia's Gazprom already halted deliveries to some EU states, and EU officials have warned that further cuts are likely. The European Commission is set to urge countries to prepare for such a scenario by slashing gas use. A draft of the EU plan proposed a voluntary target for EU countries to cut their gas demand over the next 8 months, which could make made legally binding if Europe faced a gas supply emergency. Finally, oil prices on international market edged down today, pressured by global central banks' efforts to tame inflation ahead of an expected build in U.S. crude inventories. As product demand weakens, U.S. West Texas Intermediate crude recorded a dip of 1.17% to hit $103 per barrel. Brent sells at $106, registering downward price margin of 1.25%. Bonnie Light's performance is continuing with a losing streak, with a decline of 3.25%, selling at $118.10 per barrel. For the OPEC basket, crude dealers offer $108.80, recording a price surge of 4.19%